Hey everyone, it's Chase with MoonShot Money. That's my brother Isaac behind the camera, and over there behind the computer is our dad Mike. He's looking for our next investment. In today's video, we're going to keep it simple. Investing for beginners. And who knows, I may be talking to the next Warren Buffett right now. Are you ready? Let's go. Our family talks to a lot of people who want to get started investing, but they don't have the information they need to start. So we're taking a cue from our friends. In this video, we're going to start at the beginning. And as we add more content, hopefully you'll learn much more and find the Buffett spark. So what is a stock? A stock is an investment. When you purchase a company's stock, you're actually purchasing a small piece of that company called a share. Investors like us purchase shares of companies that we think will go up over time, and the stock could be sold for a profit. It's pretty cool to know that you own a little piece of, say, McDonald's or Starbucks or whatever it is you want to buy. As long as a company is publicly traded, you can buy a piece of it. My dad tells a story of helping one of our employees get set up to invest. And he was with him when he bought his first share of stock. It was a $9 share of Ford. And when the transaction was complete, my dad shook his hand, congratulated him. What for, he asked. You're now a part owner of a company that's been around for over 100 years. A big smile came across his face. Dad walked him out to the reception area of our offices, and he told our office manager, start buying supplies from Tractor Supply. Why, she asked him. Because I'm going to be buying stock in Tractor Supply, and you'll be buying parts and supplies from me. Well, he's actually right. Now, I know the stock market can be intimidating, but relax. We're going to help you ease through the jungle, and we're going to be your guide. There's a lot of jargon, unintentional as well as intentional confusion that when you may first step into the stock market jungle. But it's not as difficult as at first it might seem. But remember, we're not financial advisors. This is merely for entertainment purposes only. We're just normal people like you trying to pass along some information and experiences and knowledge. You may have heard the words ticker symbol before and wondered, what's that? A ticker symbol is an abbreviation used to uniquely identify a particular stock. For example, the ticker symbol for Apple is AAPL, and the ticker symbol for Microsoft is MSFT. After a while, you'll have dozens and dozens of tickers memorized, and you'll be telling your friends to meet you at SBUX. Yep, Starbucks. So where do I buy stocks? How do I buy stock? These are all great questions. First, you must have a brokerage account before you can purchase shares of any company. There are lots of great brokerage companies that you can use, like Charles Schwab, Fidelity, E-Trade. The list is long. Just ask Google for a list. Our family actually uses different brokerages, but we like to use Robinhood. It's especially good for beginners. It's very simple to use and to understand. Robinhood also does a great job of stripping down complicated information to the simplest form. The best part is zero commissions on trades. So you pay them nothing to buy a share of a company and nothing to sell. Pretty cool, huh? Robinhood has made it much simpler to get started too. If you're 18, have a social security number, and a legal U.S. residential address, and a United States citizen, I think you're ready to set up an account. Just download the app, follow the instructions. It's pretty straightforward and simple. You'll have a link. You'll have to link your bank account, so you'll be able to move money into your brokerage account from there. You'll also be able to easily move money back into your bank account. That's it. Once you've done all that, you're ready to make your first investment. See, it's not that complicated. But before you make your first investment, I have some tips for you. See, a good guide won't just point and say, over there's your destination. Have fun and good luck. Tip number 1, gather some knowledge. Take time to learn a few more things. There's no hurry. Jim Cramer says there's always a bull market somewhere. Oh, what's a bull? What's a bear? There's a lot of stock market jargon. A bull or a bullish investor believes the stock market is going to go up, while a bear or bearish investor believes the stock market's going to go down. My dad says it's not about the money, it's about the knowledge. If you gather the knowledge, the money will follow. See, there always seems to be an infinite amount to learn. The good news here is you don't have to learn it all just to get in the game. There's a lot of places and different ways to learn about investing. Take time to gather some more knowledge just like you're doing now. If you would like to look at some companies and understand what they do, start making a list of potential stocks to buy. Do a Google search and look for different articles about that company. Find out as much as you can before you buy it. Hey, this is about to get exciting. Tip number 2, paper trade. You don't actually have to put your capital at risk to see if you're on the right track or not. Pick a stock, write down the date, the current stock price, and if that stock is selling, say at 20 bucks, and you want to buy 10 shares, write it down and watch the price over the next few days or weeks and see if you made a good selection. And there are actually brokerage companies like Webull, which we use also, that has a stock trading simulator. You can use it for free and set up an account. Practice makes better. No one's perfect, especially when it comes to investing, but practice makes better. Tip number 3, don't invest what you can't afford to lose. Everyone needs some money put back when unforeseen expenses may arise. The money you invest should be money above and beyond what you need on a day-to-day basis. Remember, when it comes to the market, nobody knows anything. So there's always a risk. Some people say, I'm not going to risk my money in the stock market. I've heard that a lot. Then they go out and buy a new big screen smart TV that's worth half as much as soon as they unbox it. Discretionary money is what we're suggesting that you save and put to work. Tip number 4, diversify your investments. When you're investing in single companies, you don't know what's going to happen in the next few days, weeks, or months. When we first got started, we didn't put all of our money into 1 or 2 stocks. We diversified into approximately 10 different companies. That was one layer of safety. And the stock market is actually divided into sectors. A sector is an area of the economy where businesses share the same or a related product or service. Here's some examples. Banks fall into the financial sector, while drug companies fall into the healthcare sector, or oil companies will fall into the energy sector. I think you get it. So you can diversify your investments between stocks and further diversify between sectors for another layer of protection. Sometimes all the sectors are up, sometimes all the sectors are down, but more often than not, a few sectors will actually be outperforming the others at any given time. Tip number 5, don't get emotional. This is very important. I still remember at the beginning of my investing career, when I would be freaking out when the stocks would go down. And I would always want to see it green, always want to see it go up. And I remember a specific time we were in Hilton Head. My dad wasn't there. I was down there working on opening one of our businesses. And a great company like it was NVIDIA, for example, I owned some of that. Or I remember Apple or Microsoft, it would have a down day, go down $2 or $3. I'd be texting Dad, should I sell it? Should I hold? What do you think? And he advised me to, if you're in it for the long haul, don't freak out. If you believe in the company, if they have strong financials, they have a moat, and you believe in it, then when it goes down, that's an opportunity to invest more. So don't freak out when the stock market's going down. View it as an opportunity. Here's why MoonShot Money even exists. We feel that's very important to save money, invest it, and get it growing. We live in an instant gratification society. When you spend your money, you get a little shot of dopamine in your brain, and it feels good. That's instant gratification. Investing is delayed gratification. We want to help people get over that hump and start making preparations for their future. It's important to have your money working for you. So many people get paid on Friday and they don't save anything. They find a way to buy a new shirt or a pair of shoes, and that's fine, but that shirt will one day be a 25-cent yard sale item. Robert Kiyosaki calls that turning cash into trash. Wait, who's Robert Kiyosaki? We'll save that for another video. Just know that we read his books. Everyone needs to save some money and get it invested. My dad, Mike, was born in 1964. That's the year Warren Buffett's Berkshire Hathaway became available on the stock exchange. Buffett shares were selling for $19 per share all those years ago. If my grandfather would have bought his newborn baby, my dad, $1,000 worth of Berkshire Hathaway stock in 1964, guess what it would be worth today? Right now, Berkshire Hathaway is trading for over $256,000 per share. My grandfather could have bought my dad 52 shares. And today, that same 52 shares would be worth, are you ready? Over $13 million. That's crazy. Let me pepper that a little bit. Let's say he would have invested $1,000 every year. Well, let's don't go there. That's too painful for my dad. That's why it's important to be invested. Well, that just about does it for today. If you've enjoyed this information, let us know by giving us a thumbs up. And if you haven't already, we would love for you to join our community by subscribing. Leave us a comment down below and one of us will do our best to get back with you. And remember, if you're not interested in your money, someone else is. Thanks for watching.